story behind pre-qualification, pre-approval, and how the lenders are supposed to present that to the real estate community and to the purchasers as well. There's a lot of technical issues behind it, but the pre-approval letter is the one that you want to use when you're trying to make yourself look better to the person that you're competing with who wants to buy that house that you want to spend the rest of your life in. So you want to make sure you do that pre-approval process. What does it take to get pre-approved? Well, we're going to need documentation from you. Like I alluded previously, you're going to want to provide us with a 1-month consecutive pay stubs, okay? Whether you get paid weekly, bi-weekly, monthly, you want to provide the most current 1 month worth of pay stubs. W-2 forms for the last 2 years. So if you have your 2017, provide 17 and 16. Also with the tax returns, those are also necessary to provide the tax returns. And not just page 1, you want to make sure that you provide the full tax return. And the reason you want to provide the full tax return is, let's say you are a repeat buyer, you already own a home, but you also may have an investment property. Or you may have a side business that you do. You may DJ on the weekends, or you have a catering business. You want to provide your lender with 2 years worth of tax returns, your personal returns, as well as any business returns. It's important to have that full return because specifically if you do have any rental property, you would have to look at Schedule E to see exactly how you itemize or how you line item all of your deductions. If you're posting a loss on your rental property, that's going to show up on the front page. And unfortunately, that's a direct deduction in your monthly income. So it's imperative to look at all of the income sources that are going to be on that tax return, okay? Bank statements. You're going to want to provide 2 months worth of bank statements to show that you've got the money to close for your down payment, closing costs, so on and so forth. Even if you don't have all the money that is necessary down the road when you eventually close on your home, it's still pertinent to provide those 2 months worth of bank statements to your lender because at least they're going to want to see that you have enough money for your EMD or what's called your earnest money deposit, and if that's cleared your bank account already, they want to see that as well. They're going to analyze those bank statements and they're going to look for a variety of things. They're going to look for your payroll, if you have an ACH, if it's an automatic payroll deposit. And they're also going to look for large deposits that show up on a bank statement. Okay. Typically, what a large deposit is considered 50% or greater of your gross monthly income. So if your gross monthly income is $2,000 a month, and it's on your bank statement just shows deposit $1,275. It's going to raise a red flag in the underwriting process, and they're going to want to know, where did this money come from? It's unfortunate in today's age, cash is not king when it comes to buying a house. Cash is actually your enemy because it's not documented, it's not traceable. And back with the enactment of the Patriot Act by President George Bush, that really put the kibosh on people putting large amounts of cash in their bank statements in an effort, for the Patriot Act to try to combat terrorism and money laundering and so on and so forth. So, it's important to have that. All the pages of the bank statement, and as ridiculous as it sounds, if your bank statement shows 1 of 5 and page 5 is blank, you're still required to offer a page 5. Even though there's nothing on it, and that's, the reconciliation portion of your bank statement, the underwriters are still going to require those 5 pages, okay? You've had a bankruptcy, no harm, no foul. A majority of people have had them in years past. That's not a problem. You just want to make sure you provide all of the pages of the bankruptcy, including a copy of the final discharge, okay? Not just 1 page of the bankruptcy. You want to see all schedules, because all of those schedules are going to include all of the debt that may have been included in the bankruptcy, and any real property, if you've owned a home before, will also show up in that bankruptcy. It's okay to have a home included in a bankruptcy as long as you're paying on that mortgage and if you're not just defaulted on it entirely. So having a mortgage in a bankruptcy does not necessarily mean a disqualification for a home loan approval, okay? If other types of income you are receiving, such as child support, alimony, or separate maintenance, you want to provide a copy of the divorce decree and the court order and any payment history. When trying to qualify for a home loan, we look at all sources of income, and child support payments actually can be used as income for an individual in trying to qualify for a home. You do need to show that there's going to be continuance. That income has to continue for a minimum of 3 years. So if you're receiving any child support income from a person or one of your children who are 16 years old, typically it stops at age 18, and we'd have to back that portion of that child support out of any income for that. And again, if you currently own a home, you want to provide the lender with a copy of that mortgage statement, summer and winter tax bill, as well as the homeowner's insurance. because they were going to, you will look at that information and include that in your debt structure. When you pull a credit report, and if you see a mortgage on that credit report, excuse me, all you see is a number. You will see what type of mortgage it is, whether it's conventional, FHA, or VA, okay? You may see that on there, but it doesn't necessarily reflect that that's going to be the total payment. So the lender is going to want to see your current mortgage statement, and on that current mortgage statement, it will actually show principal and interest payment. And if your taxes and insurance are included, it will say escrow portion. Then the lender knows that everything is included in that, okay? You want to provide a fully executed purchase agreement that Carrie has provided to you and negotiated for you. If you're applying for a VA home loan, some of the documentation you're going to need is a copy of your DD-214 as well as your certificate of eligibility. Certificate of eligibility will basically tell you, yes, you are eligible for a VA loan, or no, you are not eligible for a VA loan. The DD-214 is something that you get upon discharge that shows your service, your rank, your years of service, any accommodations that you have may have received, good conduct medals, so on and so forth. It tells you your pay grade or the class that you were in. It also mentions the branch of service that you were in, Army, Air Force, Marines, National Guard, the Coast Guard, so on and so forth. So now you got all this paperwork together, you called Mark pulled the credit report, everything looks great, you got all this documentation together, Mark put everything together, and we sent the pre-approval letter out. Okay, now what do? Well, you apply for a home mortgage with Mortgage One, specifically me. We've already touched on that. Now these are the actions that you're going to take next. Well, start looking at a house. Any professional realtor, Carrie, or any other real estate agent is going to be very reluctant to take a home buyer out, showing them houses, if they don't have the pre-approval letter, okay? So again, it's important to do the due diligence up front. No sense in walking into a Cadillac dealership wanting this Cadillac knowing full well you can't afford it. The salesman is not going to take the time to spend with you knowing full well that you can't afford it. So you go out and you look at some houses. You find the house of your dreams. Hey, Carrie, this place is fantastic. I want it. I don't want anybody living in my house that I want to live in the rest of my life. This is the house that I want. Carrie, let's make an offer. Carrie will negotiate with the seller and that seller's real estate agent on how best to maneuver your offer. Has the house been on the market for a long time? If the house has been on the market for a long time, you might be able to go in with a much lower offer than on a property that's only been on the market for, let's say, a day, 2 days. Unfortunately, in today's market, that seems to be the case. Houses are in high demand right now, so if you see something, we're not trying to scare you. You want to be ready and willing to make that offer right then and there, because there are 9, 10 other people sitting up right behind you that want that same house, okay? So you're gonna make the offer. Carrie calls you up and says, congratulations, they've accepted your offer. They like the terms that we've negotiated for you, and you get that signed purchase agreement. Once you have your signed purchase agreement, 9 times out of 10, you'll want to do some type of inspections, okay? The most prevalent one that people will do is a home inspection. Now, Carrie works very closely with one of her associates. His name is Dean. He will come out and do a home inspection for you, okay? A home inspector will spend a lot of time inspecting the house, top, bottom, stem to stern. They will go through your house with a fine-tooth comb. They will tell you things that are drastically wrong with the house right now, things you can live with, things that you might want to take care of over the next couple of years. They'll provide you with a very detailed report, and the report is detailed. It's going to be, a considerable amount of pages. And you have the option at that point in time saying, yes, I want to move forward with this based upon the analysis from my professional home inspector. This house looks like it's a good deal. I'm going to proceed. We're going to move forward. At that point in time, Carrie calls me up and she says, home inspection was great. My inspector was out there. Everything went well. Let's move forward. That's when we really start kicking everything into high gear on the lender's perspective. We're going to order title work. We're going to get the appraisal going. There's some other backstory things that we need to do. We need to send out verifications on your tax returns. You gave us tax returns as part of the pre-approval process or the application process, but we also sent a form out to the IRS to make sure that those tax returns that you gave us are the same ones that you filed with the IRS, and you're not trying to provide or trying to do any type of fraud with that, okay? We may send out what's called a verification of employment form. It's a standardized form that will go to somebody in the Human Resources Department, and they will fill it out saying, Bob Jones has worked here for the last 6 years. He's an hourly employee. This is his hourly rate. His probability of employment is fantastic. Here's what he's made so far year to date. This is what he made last year. This is what he made previously. And on that verification of employment form, it breaks it down a little bit even further to show what your base income would be, any bonuses, commission, overtime, things of that nature. Because you can use that income, that total income, for the qualifying process, I should say. So there's a lot of things that go on behind the scenes while the appraisal is being ordered, the title work's being done, and we're doing our verifications, so on and so forth. Okay? While that's being done, one of the things you're going to do is you need to secure homeowner's insurance for the house. So it's a good idea to call your insurance agent and say, hey, Mr. Insurance Agent, congratulations, I bought a house, now I need to get it insured. Here are all the details behind this house. Can you please provide me with a quote for homeowner's insurance? And if you could, here is the contact information from my lender. Could you please pass that along to my lender as well? Because we're going to have to communicate back and forth and exchange some information. Okay? So when we get all that, the loan has been sent to underwriting. It goes through the formal underwriting process. It will come back with what we call a conditional mortgage approval. Meaning, Mark did a lot of his job correctly up front, but there's a couple of missing pieces of the puzzle. Nobody hits a home run the very first time they're at bat. Sometimes you take a few swings, you miss. That's what the conditional approval is. They may want to see an updated pay stub. They may want you to explain a large deposit that shows up on a bank statement. They want to make sure that your interest rate is locked and you signed the disclosure. That's a big word, disclosure. There's a lot of things that go on with that. So we'll work on all of those things, get everything back to the underwriting department, and then they will issue a formal approval, or what we call a clear to close. When we issue the clear to close, we will also issue, or we will review your initial closing disclosure. You'll have a pretty good idea during the process of how much this house is going to cost, but towards the end, you really start to fine tune it, sharpen that pencil, and get an idea of exact monies that you're going to need for the closing. Okay? Again, once we have that formal underwriting, we've dotted all of our I's and crossed the T's. Underwriting is issue what's called a clear to close. We call it a CTC in the industry, and everybody's happy when they see those three letters. It's not like when you see IRS, that's a bad thing. When you see CTC, everybody's all smiles. Once we get that, we'll establish a closing date, and at that point in time, we've talked about this prior to, that's when we update that credit report. So during that process, you don't want to make any large purchases, you don't want to open any credit, you don't want to close any credit, you don't want to co-sign for somebody. You certainly don't want to go out and buy your furniture or appliances on the 3-year same as cash, we pay your sale tax type of thing. We will re-verify your employment once again to make sure that you're still working, okay? And then we'll also work with the title insurance company to verify and issue your closing figures. Once you are issued your final closing figures, you can proceed off to your closing, bring your photo ID. Congratulations, the final step. You enjoy your new home. It's really that simple. A lot of it goes on behind the scenes, okay? Does it make